Welcome to the June 9th, 2025 advance report from McGowanGroup clients and networthradio.com listeners. What a week it was, and everything changed. If you go true, not true, you got evidence of an unexpected boom this week. And I'm going to walk you through what's really happening in the economy right now. So, hearken back. March Madness. Boom. S&P 500 goes below 5,000. Wow. And it was over 6,000 before that. An official bear market. And why? Massive tariffs going to cause inflation and disruption. The reason you should subscribe is because we told you before all this happened, yes, we were due for a correction, but we also showed you what happened after the 2018 tariffs. And it's happening again. So you would have had an advance report if you subscribed to YouTube McGowanGroup. Now, boom, we hit the official definition of a bear market cycle right there in early April. It was ugly. What are we doing back at 6,000? That's right before all the March Madness started. Wow, there's some huge contributions to this. But now, S&P 500 up nearly 3% so far this year. And back here, they were expecting another wave of selling. Why? Tariffs cause inflation. You disrupted the economy, so you're likely to get a recession. That still could be true, but we have to go true, not true. So far, what's true? Wow, this shocked the financial markets this week. The Atlanta Fed, look at their growth estimates. Now we're 2/3 the way through the second quarter right now. In other words, June, you only got 1 month left, less than a month. They've been gathering up the data every week. They've been our most accurate forecaster, usually accurate to within a few tenths of a percent on economic growth. Boom, this thing spikes this week. We're at 3.8% economic growth for the U.S. economy. To put that in perspective, the 20-year average is just 2.1. Wow, what's happening? Well, it wasn't the recession and the inflation, because we go here for inflation. The most recent inflation numbers, 2.3% trailing 12 months. Wow, that is the best read since 2021, right? 4 years. That's the best inflation number in 4 years. And 2.3, the Fed's target's only 2. Wow, they're almost at their target. But, of course, Trump tweeted that Jerome Powell, Fed chair, is Mr. Too Late, a total loser. And then when he didn't cut rates in May, he called him a fool. So the diplomacy may have gotten better because they actually met this week. And something else contributed to the rally. Chairman Xi over in China had a phone call with President Trump. They spoke on the telephone. Wow. And so apparently, Trump in his normal exaggeration style said, oh, we got a deal. And Xi always comes back and says, no deal. So anyway, we'll let that thing play out. Another piece of good news that came. European Central Bank has lowered their deposit rate to 2%, the equivalent of the Fed funds rate. So they've gone from 4 to 2. They've cut by 2%. Now, let's look at Mr. Too Late. Mr. Too Late is 4.5%. It's actually 4.3 because it's a range between 4.25 and 4.5. So say 4 1/3. Anyway, he's only cut this much. He's cut 1%, not 2. Even though his inflation says he ought to be at 2 or 3, he's up at 4.5. The next meeting is June 18th. That's not even 2 weeks away. Wow. What if they cut rates? What does that do to the net present value of future cash flows for high cash flow investments? I am Spencer McGowan, President, McGowanGroup Wealth Management. We serve affluent families right from the Crescent in Dallas, and I'm your financial weatherman with your weekly fast-paced tour of the global financial markets. And if you have kids that you want financially educated, you should forward them the link so that they can become more educated, and then you won't have to pay all their bills. All right, here we go. What's going to happen to the interest rates? Fed funds rate projections, right? And this is Bloomberg. By 2026, we're down at about 3%. Wow, maybe 3.5%. But no, it looks like it's headed for 3 early in 2026. So mid-26, 3%, a little bit above. By the time we get to 2026, that's at least 4/4% rate cuts by the Fed, and the Fed projections are factored into that as well. That's huge. And if that happens, that means anytime there's bad news, they've got an excuse to cut rates, which actually increases the potential value of high cash flow investments. And that includes high yield, it includes dividend companies, and some growth companies, which are in McGowanGroup portfolios managed by the investment committee. We meet every week. Now, who's winning? This is the Standard & Poor's 500, top 10 performers year to date and bottom 10 performers year to date. NRG Energy, 73%. That is the Houston power provider. By the way, Vistra provides power for North Texas. They're up over 20% for the year, but they're leading the way. A lot of anticipation on data center demand, and nobody's ever paid this much for utilities before. That's one thing to keep in mind. Palantir, 65%. Now, they say you shouldn't make a decision without AI. Of course, they're AI. They were on CNBC this week. General Electric, 53%. GE Vernova, 47%. They make the equipment for generating power, right? Generators and such. Uber's 42%. Philip Morris, 51%, because everybody's buying those little nicotine pouches. Thank you for tuning in today to Net Worth Media. We also have Apple Podcast. Simply type in Net Worth Radio and boom, it'll hit your phone right then. If you also go to networthradio.com on a browser, you're going to be able to meet the team. You could see our performance track record, the model portfolios that go with today's broadcast. Also at networthradio.com, the Longer Play podcast is available there as well. We're grateful that you've tuned in. Remember, when we talk about a security, it doesn't make it a recommendation for your portfolio until we actually complete a written plan for you by Zoom or in office or simply a conference call. So you reach us at networthradio.com if you want to get that arranged. Market fluctuations and how to handle them. We build high cash flow portfolios, and past performance doesn't guarantee future results, so you do have to be ready for challenging markets. We can build more cash flow during challenging markets than we can when everybody's happy and everything's up, which is when we tend to raise tactical safety. Those allocation strategies are here at networthradio.com. Thank you for tuning in.